Welcome to Talk Tickers. Today, we're breaking down Dollar Tree's big third quarter 2025 earnings call. Let's jump right in.
So, right out of the gate, what do we see? A pretty impressive number. Dollar Tree delivered a really strong quarter, posting a 12% year-over-year increase in adjusted earnings per share. I mean, that's a solid beat, no question about it.
Okay, but here's the twist. The market kind of shrugged. I mean, despite that solid beat, the stock moved just over 3.6%. That is less than half of what the options market was pricing in. So what gives? What is that disconnect all about?
All right, here's how we're going to break it down. We'll hit the Q3 earnings snapshot, look inside their multi-price engine, talk guidance and headwinds, check the market pulse, and then we'll give you our take with the next call.
Okay, first up, the Q3 earnings snapshot. Let's dive into these headline numbers because they really show a company that is executing well. All right, look at this. Adjusted EPS came in at $1.21. That's a big beat, folks. We're talking about 11 to 12% above what the street was looking for. Revenue? Pretty much dead on with expectations at about $4.7 billion. And same-store sales grew a really healthy 4.2%, powered by a 4.5% bump in the average ticket size.
But the real story here, it isn't just about controlling costs or something boring like that. No, it's about a really fundamental shift in their whole strategy. And believe me, it is paying off big time.
And here it is, straight from the CEO, Mike Creedon. He says, quote, "Multi-price is one of the most important strategic shifts in Dollar Tree's modern history, and it's working." You gotta understand, for a company literally named Dollar Tree, this multi-price idea is a huge deal. And it's the core driver of what's happening right now. And wow, this chart, this just illustrates the point perfectly. Take a look at the record Halloween season. These multi-price items, right, they only made up 8% of the units they sold, just a tiny fraction. But they generated a full 25% of total sales and gross margin for the whole category. I mean, that is some serious leverage.
So what does this really mean? It's crucial. This strategy isn't just about driving top-line sales. It's about driving profitability. It lets the company sell fewer units while generating way more margin dollars. It's not about volume, it's about value. A real game changer for them. Okay, so that's the engine. Now let's move on to the outlook and see how this all builds into their forecast for the future. And good news for investors. Management is feeling confident. They actually raised their full-year guidance for adjusted EPS. That's a pretty strong signal, especially as we head into the all-important holiday season. And you can see they're also expecting stronger comp growth to support that. But, of course, it's never a perfectly clear sky. The Q&A session definitely highlighted some headwinds that are still lingering out there. We're talking about things like higher tariff costs, potential disruptions for their customers from changes to SNAP benefits, and, wage pressures on the SG&A line. These are all real risks to keep an eye on.
All right, let's circle back to that muted stock reaction we talked about at the beginning. To really get it, we need to zoom out and look at the bigger picture, the context.
And here's that context in one chart. The stock has been on an absolute tear. We're talking up over 50% in the past year. It has absolutely crushed not just the S&P 500, but the entire retail sector. It's been a monster performer. So here's the key takeaway. The market largely expected this. After a run-up like that, a strong quarter was already baked into the price. You see, the market saw this quarter as validation of the story, not some brand new inflection point that changes everything. And that brings us to our favorite part, the next call. This is where we give you our take on what comes next. So the big question is, with a strategy that's clearly working, but a stock that's already been rewarded handsomely for it, what should you, as an investor, expect to happen next? Okay, here's our prediction for Q4. We think they're going to hit their targets, pretty much in line with guidance. That multi-price momentum should continue to drive strong comps. However, we see the stock's price action as probably being range-bound. Why? Because the good news, the strong fundamentals, they're already priced in. The secret's out, so to speak. Which leads us to our rating, market perform. Look, the company has successfully executed a brilliant strategic pivot, no doubt about it. But the bar for outperformance from here, well, it's just considerably higher now.
And as always, this is not financial advice.